Okay, hi everybody. Today I have the pleasure to interview Charley Ma, the GM of FinTech at Alloy. At Fiat Republic, we have this concept of comparing Web3 to the anatomy of a human being. So to live, survive, and thrive, Web3 needs to rely on organs, and we consider Web 2.5 players to be those organs, to be those sort of constituent parts of that human organism. So we are exploring those organs, their function, how do they work, how do they connect with one another to support crypto platforms and the growth of the crypto industry and the Web3 industry as a whole as well. So by Web 2.5 players, we consider KYC, fraud providers, fiat on-ramp and off-ramp, infrastructure providers, open banking providers, banking as a service providers, payment providers, payment card issuers, and so on and so forth. Charley, if you could tell us a little bit about Alloy, just to start us off with, and then let's jump to the questions.
Yeah, so Allo, we call ourselves an identity decisioning platform, but what does that actually mean? I like to sum it up as we enable financial services companies of all shapes and sizes, ranging from small fintech companies all the way up to large traditional FIs, to be able to connect into the data sources that they need, build decisions and workflows on top of those data sources, and then being able to actually track and iterate on top of those decisions. And the decisions that they're making using Alloy is typically related to kind of three core areas. I would say one around onboarding, so customer business onboarding. That's kind of your typical KYC fraud checks at the point of onboarding. Two, transaction monitoring, so be able to run an AML sanction screening transaction monitoring process, as well as also being able to make decisions around fraud from ongoing transaction monitoring. And then finally, underwriting, being able to make risk-based decisions from a credit perspective. As kind of the three main buckets that we help financial institutions make decisions on.
Awesome. So how do you believe at Alloy identity decisioning, so I guess focusing on the first pillar, right, of onboarding, can help prevent crypto platforms from servicing bad actors?
Yeah, so I would say we have a very broad definition of what encompasses identity, right? So for companies that are using Alloy, like one out of the box, they get access to any sort of data source that they could possibly care about as it relates to identity and risk, right? So in addition to your kind of, if you do need to do a kind of quote unquote straightforward KYC process, right? There's actually kind of myriads and myriads of variations of ways of how you do KYC on a consumer, right? You can do ID verification, right, where you have the user upload a selfie and go through ID verification, upload a driver's license, right? There's tons of different data sources there. You can go through phone checks, IP checks, name checks, social security checks, depending upon how you want to run your CIP program. There's a bunch of different ways of how you configure that, and we just want to enable our customers to be able to connect to the data sources that they need and in a really easy sort of use manner, and be able to make the decisions that they need to use without having to rely on technical resources. And so, from our perspective, we really leave it up to our customers to kind of define what are the regulatory requirements and sort of the fraud scopes that they care about in regards to onboarding users into their system.
Right. So is there anything specific, crypto industry specific that based on the solutions and the tools that you have developed that you see being used more, for example, than for example in other industries?
Yeah, so for crypto companies, it's being able to kind of bridge both on-chain data and off-chain data, right? So kind of TradFi data, right? So we provide all the data sources you could possibly care about for onboarding user onto a kind of TradFi product, right? ACH, wire, checks, etc. But we also provide integrations to data sources such as chain analysis, right? To be able to review and look at on-chain data. So looking at wallet data, transaction data, and being able to kind of view those sources and combine those kind of sources into a single decision in a single platform.
And in your experience, does that get used kind of in tandem, like as a collection of those sort of different data sources by crypto platforms specifically?
Yeah, so our whole, I would say, kind of thesis right around the company is that more often than not, a lot of these data sources have historically been sort of viewed in a very disparate manner, right? You have a group looking at sort of payments risk data. You have a group looking at on-chain risk data. You have a group looking at onboarding data, looking at transaction monitoring data, sort of all these different pockets of risk and decisions sort of be made in a bit of a siloed manner, right? And with Alloy, being able to kind of view a comprehensive view of all the decisions you're making on a customer, we view actually results in better risk decisioning kind of holistically, right? So in addition to allowing you to onboard more good customers, right? It also hopes to ideally also let you catch potentially fraudulent customers that are trying to sneak through your systems. But you have to kind of view it into one holistic kind of set of the customer view, and that's what we enable customers to do.
Awesome, awesome. So obviously, crypto by its nature high risk, right? And invites a lot of abuse of existing systems or mechanisms that are put in place. What are some of the decision tools, processes a crypto platform specifically can employ to just stay healthy and ahead of the game on that front?
Yeah. So I would say it kind of relates to the point around having a single platform to be able to view all your customer sets, right? But I think a key thing that we sort of recommend is having kind of a processes and platforms in place to be able to identify risk at every step of the user journey, right? So oftentimes, what we see is, oh, we've done some sort of risk decisioning at the time of onboarding because we had to, right? When they apply for a loan, or when we offer them access to our wallet and they're starting to do transactions. Oftentimes we see, okay, great, I've solved this sort of onboarding problem, right? But what we tell customers is that what's really important is being able to understand everything that consumer, that user is doing on your platform, and being able to evaluate risk at every single step of that user journey. So whether they're adding a new bank account to your wallet, right? They're sending a new transaction. Each one of those should be tracked in a really kind of lightweight manner. And then you should be able to kind of identify and evaluate risk as the user kind of grows through the application, right? So, for example, say that a user opens up a wallet in the U.S., but then 4 days later an IP comes in from Siberia looking to add in an external bank account and send transactions out, right? Obviously, in retrospect, if you look at that transaction, you would know, okay, something here is a little bit off, and it's probably worth an additional review to see what's going on, right? But if you aren't tracking that at every kind of step, you'd only capture that onboarding where they look great, and maybe they had a third-party account takeover event happen, and you wouldn't be able to catch that secondary risk event there. And so we will often say, yeah, especially for crypto companies and just how fast crypto moves today, that's really, really important kind of from day one.
Yeah, so kind of play it back to basically throughout the entire customer journey, whether this is an on-ramp, ongoing activity on the blockchain, someone moving money from one wallet to another, tokens, or then cashing out back to fiat. It doesn't really matter which stage of that journey. It like all of that should be monitored, because otherwise you won't be able to get that holistic or create that holistic risk assessment. Correct?
Yeah, exactly. Yeah, we won't be able to get and kind of build out the story as to what's happening with that user on your platform.
Exactly. Awesome. That's some great insights. So, what kind of methods, in your experience, increase the visibility of fraud before it starts the crypto customer journey, right? So, like, what can we do before it enters the world of crypto?
It's a good question. So one thing that we've been spending a lot of time with our customer sets is leveraging just kind of behavior biometrics ahead of them sort of getting access to your systems or your accounts, right? And I want to caveat that there's obviously sort of like the quote unquote DeFi world, right? And then there's kind of like centralized DeFi, or however you want to call it, right? And I would say we very much live in this world of, we work with more of the latter category, less of the full DeFi category, right? Like I think, right, DeFi, you own your keys, you own your keys, you are your own wallet, you self custody. That's just sort of a very different ecosystem, right? The ecosystem that we're working at is usually where people are acting as custodians, and so there is a degree of trust that has to be exchanged between the consumer and the platform, and vice versa, right? So as a result, there does have to be risk-based decisioning on whether or not you want to onboard a user onto your platform or your system. And one thing that we've been spending a lot more time with companies is being able to leverage behavior biometrics, right? Where you can leverage being able to see sort of what type of behaviors is that user clicking on your platform. For example, oftentimes fraudsters, especially if they're doing it at a much larger scale, are going to be using bots and scrapers to be able to kind of attack your platform, right? A bot interacting with your website looks very, very different than a regular user interacting with their website, right? We partnered with a few data providers in our ecosystem with the likes of things like NeuroID to be able to offer that kind of out of the box. But starting to kind of leverage pre-checks before the user even goes through onboarding is starting to become really, really high signal, especially within the kind of crypto industry.
Yeah, and then there's all sorts of things that can or people talk about or companies try and be innovative with like social profiling, and holding that in some kind of a shared database, to kind of but then that goes into the sort of data privacy issues and how is that relevant with the legislation that we have or compliant with the legislation that we have in place already. So yeah, it's definitely a fascinating subject. So in terms of like, there's always this requirement, like when you're in crypto, and we certainly see that by offering payment services and banking services to crypto platforms. There's this requirement to have a rubber stamp to be certified, right? So how can some of the solutions that you guys provide help demonstrate crypto platforms demonstrate certain like level of AML, fraud management, risk management to the likes of banks and to the regulators ultimately?
Yeah, it's a good question. Like unfortunately, in sort of my opinion, there's never going to be, if you're looking for someone to rubber stamp you saying that, yep, you're good to go. Like if you do this thing, everything will be good from a regulatory fraud perspective. That just doesn't really exist in the industry, right? Which is why it makes things so difficult. And then obviously, and then you add in the complexity of like that doesn't exist in quote unquote fintech, really, right? And then you add in crypto, which is, I think, in a further kind of really, really big gray area, and that's really, really difficult, right? But there are what we kind of call, or what we say, sort of, there's like best practices that exist in the industry, right? And so what we provide, and sort of what we talked about for customers with Alloy, is how do we provide our customers with a set of tools, workflows, platform to enable those best practices, right? So that, hey, depending upon however you interpret and believe to be your regulatory requirements, you're able to actually express, here is our compliance program and requirements, right? Whereas my compliance program says I'm doing KYC, and the way I'm doing KYC is by looking up phone information, looking up IP information, doing an ID verification, step up authentication if things go into manual review. This is what my compliance program says, right? And I think there's an issue where you run into the most sort of hot water when what you write on paper versus what you're actually doing sort of is a big disconnect there. And I think for a lot of crypto companies that, we've seen that to be the case sometimes. And what Alloy does is we make it really, really easy for that to be kind of as true as possible, right? It was, hey, you've gotten into an agreement with your legal team, with your regulatory team, with your bank sponsor, with your regulator, etc. And this is what I'm doing from a compliance perspective in regards to AML, sanction screening, CIP, right? And then being able to actually show, okay, and I have a platform in place to actually go out and express that. It's auditable, it's version controlled, it has all the various sort of ability to make changes as quickly as I need. I think that sort of like covering that delta as much as possible is what I think drives a lot more certainty around your regulatory stance.
Yeah, and just on that, and kind of to follow up on that, there's this movement among certain regulators to kind of prioritize risk-based approaches more than kind of rigid limits, like or single rule-based, monitoring systems or even KYC platforms. How do you approach that from a obviously a supplier's perspective? Are you trying to get in line with those sort of expectations? Do you employ AI in any one of your or machine learning, because those two are not exactly the same, in any one of your solutions or tech stacks?
Yeah, so we do. So, one thing that we spend a lot of time with our customers on is how do you take the information that you get from transaction monitoring, right? So, from ongoing monitoring, right? So, being able to actually track that full journey of that user, where, say, hypothetically, you onboarded a user, and there's always going to be sort of like a varying degree of thresholds, right? There's like, eventually you land into like yes, no, and you have to decide whether or not to onboard a user, right? But there's always going to be there's users that, yes, this obviously looks like a great user for my platform. They're onboarded. It's going to be super easy, right? And there are always going to be users that, oh, we weren't sure, but they support enough documentation such that we reached a degree of confidence that my operations team approved the user being onboarded to the platform, right? But then say that they were at that borderline riskness, right? And then later on, they start to sort of commit some fraud at some sort of scale on your platform. Being able to take that decision of the ongoing sort of monitoring and feed that back into onboarding and trying to figure out, well, what are the things that I could have looked at the point of onboarding from a data source perspective, from how I'm using my data sources, from the order of even how I'm using those data sources to improve approving more good users and denying bad users, right? That's something that our team has been spending a lot of time with our customer sets on, kind of taking in that final outcome data and using that via sort of like machine learning and AI to improve onboarding decisioning. And so our perspective is we want to be able to enable and give our clients the tool sets that they need to make better decisions over time and improve those decisions over time. And we're continuing to kind of invest into product to be able to do so.
Yeah, that's awesome. That's really powerful because that combination of like capturing snapshots and then learning or monitoring the ongoing activity and then factoring that into decision making. That is really like in many ways this is like going from if this then that to if this and this and this and this then that. And maybe that, right? So it's kind of making the algorithm or the sort of if this then that logic a little bit more complex, but allowing it to learn or the data set to kind of be dynamically applicable to the relevant circumstances, right?
Yep. And then the key there is obviously like explainability. And so for us, it's still, hey, we want to give you the insights and the tools you need to make improvements, but we also want to make sure that you as a company, you understand what's going on, what changes are being made, and you're able to then kind of downstream also explain at some point to a regulator, to your bank sponsor, hey, these are the changes that I made and why I made those changes.
Yeah, exactly. Yeah, that's really important. So why is it important, like just kind of focusing on banks for a little bit? So to bridge banks and crypto in terms of identity, like there's, we are of Fiat Republic are of the opinion there's a big gap in terms of information and data sharing between banks and the crypto industry. You guys, I believe, share that opinion. Why is it important to sort of bridge that gap?
Yeah. I mean, there's obviously like sort of like the macro environment. I mean, aside from the sort of the bear market that we're in right now, right? We have seen tremendous adoption of crypto amongst the average consumer, right? Like even if you just look at 3 4 years ago, crypto is here. It's here to stay. It's entered the mainstream consciousness, right? It is a thing that consumers care about and are increasingly more and more consumers are interacting with them, whether indirectly or directly, right? I think like everything that's happening with the FTX fallout is sort of an interesting microcosm, just seeing how widespread and how far touching crypto has gone, for better for worse, in the financial services industry, right? And so I think that the worst answer is, well, I don't want to care about it. I'm not going to touch crypto. My consumers are going to touch crypto. Fun fact: if you're touching anything within financial services, at some point or the other, you're going to have some sort of exposure to crypto nowadays, right? And so, something that we're spending a lot of time with the banks that we work with is that is becoming increasingly important, right? Where understanding how crypto works, and understanding how it interacts with traditional finance, and then understanding the risk vectors that your product may or may not have to crypto is really, really important. And spending the time to understand that is becoming more and more critical as crypto continues to grow.
Yeah. Do you have this feeling sometimes, like when dealing and talking to banks, that like sometimes there's not even an understanding of the questions that are supposed to be asked?
Oh, 100%.
Oh, okay.
Yeah, I think it's definitely gotten better. Like I think that 5 years ago, I was like way back in the day. I used to work at JP Morgan, and I was doing a lot of early kind of Bitcoin blockchain work. And I remember the first thing I ever got when I sort of made one of our first strategy checks on Bitcoin was, oh, it's just all fraud. Like we should just ban every single user that is using Bitcoin. Like anyone that's transacting on an exchange, ban them. And I remember going to our sort of bank executives like, but I use an exchange. Like I am using my Chase account with Coinbase. It seems like a bit of a heavy-handed answer to just ban all your users that are using Coinbase, right? Um, Fast forward to now, obviously people have a bit of a better understanding, but I'm sure there's still banks that are doing that, right? Where it's like, hey, I don't understand crypto. I just have to blanket ban it. That being said, on their side though, I can understand why where that's coming from, right? Where they're probably seeing, oh, we're getting a ton of chargeback requests, we're going to see a ton of fraud. It's just a big money losing. This whole thing around crypto, we're just seeing a lot of money being lost here. And if you don't have the right tools in place to be able to kind of have the right level of sophistication, like you do have to use a pretty blank instrument to be able to kind of cut your losses there. And so that's where we think, yeah, that the education piece, the platforming piece, and having the right tools in place to understand those type of transactions between those two worlds become increasingly important.
Yeah, we definitely agree with that. We agree with you as well at Fiat Republic. So, how, in terms of fraud, just focusing on fraud for a moment, like when fraud is already in, like and that is then discovered at some point later on, how do you identify it? Like, what are the tools that you can use to identify it, and what are the symptoms of fraud? Happening. The macro symptoms. Let's put it this way on a business.
Yeah, for sure. It's kind of funny. I think there's some meme or something on Twitter where it's like everything in crypto is sort of re-identifying and sort of relearning everything that financial services and fintech has kind of gone through for the past like 10, 20 years, right? And what we often say is that a lot of the fraud that kind of happens in fintech and other TradFi problems all exist on crypto platforms, right? Like these romance schemes, account takeovers, payment fraud, wire ACH fraud, car fraud. Like this has existed in financial services.
Friendly fraud as well.
Friendly, yeah, exactly. Like for forever, right? There are there are some aspects I think that makes crypto unique. Quite unique, right? Where especially a lot of crypto, especially if you're using kind of pure DeFi, it's most transactions are irreversible, right? They're very, very fast, kind of global in nature, right? So there are aspects that kind of make it a little bit unique. But honestly, like for us, like the core thing really goes down to being able to have a system in place to be able to detect anonymous activity, right? And then being able to tie that activity back to points of onboarding into your product is really, really critical, right? Where at any point in time, you're going to have on ramp and off ramps into your own product, right? And being able to capture as much information, as you want and as the customer wants, that makes sense to make a risk-based decision at those points is key. And then kind of going what we're talking about in the beginning, where just capturing, being able to detect anonymous activity is really important. And the kind of symptoms of anonymous activity that we often recommend looking at, right? Super high velocity transactions doesn't mean that it's fraudulent at all, right? Like there are users that are going to be super users and just going to have a ton of transactions, but it is something just to look at and to investigate. And if there's an anonymous amount of transactions from users, to say a user was not using your platform for many months, and all of a sudden starts sending everything out to a bunch of different wallets, something just to ask for additional information and to look at, right? Um, Increase in application approvals, decreases in kind of dramatic increases in applications in a short period of time could be a symptom of a potential fraud attack. You may or may not know what the vector is at the time, right? But just being able to track and understand that, oh, maybe, we did some acquisition event, but if there's something unexplainable, there's no such thing as sort of free acquisitions in today's market, in my opinion. Applications with inconsistent PII, if you do collect PII, right, is important. It's sort of all these typical things that I think we see in fintech. We often recommend as sort of quote unquote best practices for crypto companies, similarly too.
Is this the additional element of you moving tokens from one blockchain to another? Is that an additional risk factor here, and when it comes to fraud?
I think to me that's probably one of the more most difficult ones, right? Where great if you're sort of transacting within the same network, like sure, yeah, maybe you have some mixers, you have to kind of deal with that, right? But if you're all on the same blockchain, if anything, it's actually pretty amazing the amount of information and sort of risk-based scoring you can get from looking at wallets and transactions on a blockchain, right? Like the fact that it's on chain means that you can see every transaction, and in the TradFi world, that's something that you actually don't get the luxury of to have, right? But I think the moment that wallets start transacting off chain and start jumping across chains, that's where things start to get a little bit tricky. We think there are some interesting products and solutions out there, but just being able to kind of track that and understand that as a potential risk vector, I think is important to know.
Yeah, for sure, for sure. And we're definitely seeing that as well, like when we're processing payments and offering banking to our customers as well. So just to kind of finish off, like one very general question. It's been very, very insightful, everything that you said so far. But where do you think crypto is going when it comes to trust, right? Because obviously a lot of the stuff that we were talking about is generating trust, is adding credibility, adding legitimacy. We've just had, some major shock waves come to the industry and yeah, and lift everything upside down. Where do you think this is going?
Yeah, my personal opinion, I think you basically are going to fall into one of two camps. I think either you're going to go fall into kind of full DeFi, right, in terms of company wise, company sets in crypto, where everything is truly on chain, everything is auditable, it's all in the smart contract, like code is law, and it's all codified and reviewable and transparent, and everyone can kind of view the state of the world, right? Where if you're running a full DeFi exchange, it's I want to be able to see the entire order book. I want to be able to see your reserves. All that needs to be sort of on chain and provable, right? There's no sort of like there shouldn't be reliance on any kind of centralized person, entity, individual to be able to track that, right? It should all sort of be done in the contract. I think we're going to see a big push in that direction. And then the other side, I think we're going to see a big push into regulated entities, right? Where, okay, great, if you don't have that, you're going to be regulated, or you should be, sort of acting as though you're going to be regulated similarly to a bank, right? I think we're starting to see a lot more regulatory scrutiny in crypto, right? Thanks to things like Luna and FTX. When there's that much consumer harm, bet your butt that regulators are going to come in and figure out how to regulate the heck out of things, right? I hope they do the right thing and to sort of actually still provide regulatory guidance while allowing for innovation to kind of thrive and develop, right? But we know that regulation is coming, and I think that the sort of advantage is going to accrue to those that are actually building regulated products in a very sort of diligent, deliberate manner. And I think those are the two worlds they're going to be living in. I think that the sort of like Caribbean, internationally entity and sort of internationally domiciled sort of DeFi, CeFi entity, like that's going to go away.
Yeah, I agree with you. So you're basically saying that it's going to be polarized, right? You're gonna go to either one of the extremes. I would agree with you actually on that, because I think yeah, it's been the amount of gray area, so that people have been taking advantage of, right? I think that's the first thing that's going to go away, and therefore more rigid or more kind of pronounced camps are going to be forming on either sides of that equation.
Yep, 100%. I agree. Yeah.
Awesome. Well, thank you so much. It's been a true pleasure to have you and to hear your insights on the product, on the solution that you guys are offering. Thanks so much. It's been a pleasure.
Yeah, thanks for having me. Fun combo.
Awesome. Thanks a lot, Charlie.